So just keep going. So to your point, have grit, have that hustle, have that passion, and it'll see you through. And so that came from my father first and foremost, just saying never give up on yourself. Whatever it is that you're going to go after with passion. So I certainly have held on to that. And that's not just investing advice, that's life advice, if you will.
Thank you for being with us every day on the Real Estate Syndication Show. I've got a gift for you, but I want to ask that you will leave a written rating and review on iTunes. If you'll send a screenshot to info@LifeBridge Capital of that review and a mailing address, I want to send you one of my recommended monthly books.
Hello, this is your daily real estate syndication show. And this is Deana Berg, standing in for Whitney Sewell. Hey, I just want to thank you, all of the faithful listeners who have been with Whitney for many years. I know what it's like to faithfully listen to a podcast and have a new host, sometimes guest hosts, and it can take a minute to get used to that person. So I just want to thank you for allowing me to win your trust. And I want to do well by all of the listeners that have followed Whitney for all these years. So thank you so much. Let me talk about today's show. I'm very excited to introduce to you Sean Donnelly. Well, Sean is still heavily invested in the equities market and holds a small portfolio of rentals. Actually, I think he just recently liquidated all of those, but I do know that he strongly believes in passive investing. I know that he believes it is the best way to offset the cyclical nature of traditional investment vehicles, as well as avoiding the headaches of direct property ownership. We're going to talk about that. What Sean likes most about syndications and this space is that the investment opportunities are not one size fits all, and that the community of investors genuinely wants to help. So I'm going to welcome Sean to the show, and I hope you enjoyed today's episode. Sean, welcome to the show. I'm so glad that you're here. I am thankful that you're giving us your time. I know that you have a lot of valuable things for our listeners to learn from. I'm excited to be able to really hone in on the passive investor side of things. We have a lot of listeners who are operators, but we also have a lot of listeners who are passive investors. And so the better content we can provide for them, from lessons learned, visions, thoughts about the future and what you're doing now, I think will be really helpful. So thanks for being here.
Well, no, thanks so much for having me. This is going to be fun.
Good. Why don't we start with a flyover? Why don't you give us a little bit of perspective about where you've come from, who you are, and where you're at right now?
Sure. Well, physically, I'm sitting in a suburb of Columbus, Ohio, but I've lived in 8 states, 10 different cities, and I'm here for my W-2. I work for a reinsurance company. So we basically work in the risk transfer business on the finance side for insurance companies. So basically insurance for insurance companies. And I've been doing that for almost 27 years. Been married 26 years, have 3 kids, 2 in college, 1 in high school. So hence all the gray hair for those that are looking at this podcast versus listening to this podcast. And yeah, I'm continue to be heavily invested in the equities market, but a number of years ago, got into the active side, several rentals. And then towards the end of 19, more so in 2020, jumped into the passive investing side. And that's really what my passion is these days, is the passive investing, learning about passive investing, learning about different asset classes, helping others learn, because it's, we're all at the infinite stage at some point, right? As far as growing and learning and that learning curve. So I enjoy that very much.
So let's talk about that transition point and also what that felt like for you. I like to ask folks that I interview, did it feel a little bit scary for you jumping from one type of investment into equities, into real estate? What was it like when you entered into your first passive investment and really trusting somebody else to deploy and administer and manage your capital? What was that like? And when was that?
So we'll go back to the first part of your question. I first got interested in real estate at I'll say the year, and everybody will understand when I say a very tough time. It was 2006, 2007. And a very close friend of mine came to me and said, "Hey, I'm thinking about flipping a house. Are you in?" I'm like, I didn't know anything about flipping, but I said, "Yeah, sure. Why not? What else do I have going on with my time?" My wife certainly felt differently about where my time should be spent, but we jumped into that. And I like to say that it was a college course. We did not make any money. We lost money, but I chalked that up as tuition to learn about real estate. Thankfully, we didn't lose a ton, but it was enough that made me more interested in it as opposed to driving me away. And from that experience, I learned, man, there is a lot, it's like an onion. There are a lot of different things that you can do within real estate. So from there, I just started poking around and thinking about it a little bit more, waited for the market to cool off and get a little bit better as we got through 2007 and 2008, of course. Did not flip again for many, many years because I knew that that part was not my expertise, right?
I want to go back to something that you mentioned before you go on. Your wife was not into it. Let's talk about that. I always think it's really interesting from the perspective of couples of how you approach investments. Now, this was a while ago. How has that evolved into where you are now? Is she on board? And how did you overcome that hesitation on her part?
Yeah, I would say the hesitation remained. It did not necessarily go away. She was pregnant with our youngest child and going down and tearing off wallpaper.
You wanted to flip a house.
Yeah. Asking her and my buddy's wife to come down and tear off wallpaper and paint and do things like that were just not, that was not on her radar screen.
Never mind the asbestos risk.
No kidding. Oh, it was, believe me, when I say this house, it was a piece of work. So needless to say, she was never fully on board with that. Right. But she understood and was supportive in me in trying to investigate other ways within the real estate industry to figure out something that made more sense for me, where I could put my skills to work, match task to talent, if you will. So she was supportive in that regard. So fast forward to, passive investing. Well, certainly before that, the active investing where I had property management involved, right? I knew that I wanted to get into the active side, actually own real assets as opposed to paper assets, get something that was not correlated to the market, but also diversify from all the stuff that I had in the stock market and retirement accounts and things like that. So she was certainly supportive of that and thought, oh, that'll be neat for you. It'll keep you busy, maybe keep you out of my hair or, whatever the case is. But she, along the way, then became frustrated for the same reasons that I was getting frustrated with property management. I had two different property managers, depending on if I had duplexes or single family homes. My single family home property manager was excellent, was awesome. The duplex property manager, not so much. And that became a very big headache for me over time. I was essentially managing the property manager. And so she would see that stress.
Why wasn't your property manager the same? Were you in different areas of town?
I was in different areas of town, but that didn't necessarily matter. My single home property manager did not do that. That was not his forte. Okay. He was not a multiple door property manager. He was only a single family home manager. Otherwise, I asked him, believe me, I'm like, hey, I'm going to venture into this realm. Would you do this? And he's like, I'm out. Sorry. I only do this. I stay in my lane. And he was good at it. So he knew right away. That was,
property managers, I feel, are often the turning point into the passive investment world. It really makes or breaks an investment. Either you have a really good one and that's your experience, or you don't. My first foray into single family home investment was, we were remodeling our primary residence. It was going to be a year. And we were like, let's just buy another home and live in that, then use it as an investment instead of dump all that money into an apartment. Right. So we did that. We moved out. The second month, our property manager of having property management, the neighbor calls us. We're out of town on the 4th of July. Why is there caution police tape wrapped all the way around your house and there's cops everywhere? So there was a shooting on our property. So we were like, single family home investment may not be for us. So the property manager had no idea, didn't do anything about it. So it's interesting exchanging property management experiences because it can be one or the other. It's quite variant.
I do feel like your experience, my experience with it, I feel like that is the majority, unfortunately, of people out there. Mm-hmm. They just, unless they're managing the properties themselves, which I just didn't have the time for that. And again, not my skill set. So I wasn't gonna go down that road. So I knew that. But I feel like it's the majority of the people, at least that I talk to now in the passive space, that have sold off or are in the middle of selling off or getting out of the active space, had just a negative experience. And that is a broad brush.
Most of us start self-managing. I'm impressed and surprised. Maybe it was because you had little kids at the time. Usually you start with the self-managing and you're like, I know I'm going to go to the school of hard knocks, but I better learn it. Well, fast forward, I think you really made the wise decision.
Well, I think part of it goes back to that first flip that we were doing. That was us. We didn't hire anything out. Well, we did have my buddy's dad, who was very handy, do some things. But as far as professional people come in, no. So that was us learning the School of Hard Knocks, going through the School of Hard Knocks and learning it from, soup to nuts, some of the stuff. And we made a ton of mistakes and learned along the way, but it was that experience that took me into active. But then to say, okay, I don't want to do this. I don't want to field the phone calls. I don't want to hop in the car and have to deal with all that stuff. I'll let somebody else that is supposedly a professional that's really good at it go do that.
I just want to pause and highlight this because I think so often we can dabble in something like real estate investment and we feel like it's either I'm going to pass or fail. And if I'm going to try this thing, I'm going to risk. There is no gain without risk, right? And so we're like, I'm going to risk this. And if I make it, I make it. If I don't, I'm never touching this again. I love your perspective. And you're like, hey, I failed the first time and I learned a lot of lessons and now I'm going to apply that. So I want to just pick that out of what you're talking about, because I think it's easy to say, I was right. I should have never done this, but look what you would have missed out on, or any of us had we walked away with the fail.
Yeah. And I will say it took me some time before, 2008, when we sold that flip, before I got back in the state on the active side. It took me some time. It took me a few years to sort of say, okay, I'm okay with the failure, if you will. Again, I chalked it up as a college course. What I was able to write off on my taxes, I chalked it up as tuition and figure out, okay, what is it? I spent that time trying to figure out, all right, I know that there's, like I said, it's an onion. There's a lot of layers we can peel back. What layers do I want to tackle next? What makes the most sense? So it did take me some time. So I don't want listeners to presume or jump to the thought that, the very next week or the very next day after failing on that flip that I jumped into something else. I did take some time to think about, okay, what do I really want to do? What do I want to try to seek out next?
And so is that when you went into a more passive opportunity?
So I was in the active space for half dozen years or so. And a good friend of mine, Jim Pfeiffer, who he and I work closely on Left Field Investors, which hopefully we'll get into down the road. He brought the passive idea to me. He was also an active real estate owner, an investor. And he was digging into the passive side and doing some passive stuff. And by nature, I spend a lot of time underwriting, thinking through situations, changing my mind, and everything that we had countless happy hour meetings, beers and lunches and some dinners. And we would talk about this and it just all seemed too good to be true, except for the fact that the only part that was scary was you're sending your money off to somebody, normally a total stranger, maybe after a half hour or 40-minute conversation. Put that aside.
Not an inconsequential amount either.
No, right. Exactly. Yes. Which I will say, I'm not sure I was telling my wife the entire story up front with that, which was great. She's been supportive. But put that part aside, the other pieces all just seem too good to be true. So I give this person my money and every month there's, X percent coming in cash flow. And then on top of that, 3, 5, 7 years down the road, if they sell the property, I get a share in the profits. Like it just didn't make sense to me, right? It was just it was a layer in that onion, but it was just so completely different than anything that I had been investigating or knew anybody to be involved with. So that took me some time. So that I probably spent better part of 2 years, 18 months or so before I jumped in and did my first passive investment. And then I can tell you from then on that, like I said, I was late 19. And now I'm approaching 35 different passive opportunities that I'm in. So I very quickly learned that, yes, this is for me. This is more the onion, part of the onion that I was looking for. Mm-hmm. This is task to talent because I like numbers. I can dig into numbers. I can do a fairly good job of differentiating good deals, bad deals. And even the bad deals, maybe it's just not a deal for me. So holding myself accountable to what my goals are. So this passive space very quickly became, this is my thing.
This is your thing. So wait, how many beers did you drink before you moved from, let's just talk, because I have a friend like that too. We were getting into the space. Lindsay Massengale, if you're out there, this is you. We would sit around, we would meet once a week and we would be like, the numbers just look too good. So how long, I think it's helpful for listeners who may be on the verge or if you could milestone for us what it looked like. You did your active investment. And then when did you and Jim start sitting down and chatting? And how long was it then after that until you jumped off and made your first passive investment?
Yeah, well, I was still heavily actively investing when we first had conversations about passive investing. So I would say that was probably like late 18, middle of 18, something like that. So again, it was a good 18 months or so before I wrote that first check and sent that first check off. It was probably maybe 16 months before I had the first phone call. Got up the nerve to actually call somebody and not know an operator, that I didn't know, and I didn't know much about the deal, and I didn't know how this call was going to go. And then it was roughly a 2-month time frame, 2.5-month time frame before I got up the nerve then to call the bank and wire some
Wire
money
that money. Let's
Oh
talk about that phone
gosh.
call. This is important. This is like my job. I'm an investor relations specialist. So I have these phone calls all the time. And I wonder if I would have guessed if it was your first phone call or not. what did you guys talk about? What was your impression? And what would have been important to you that maybe wasn't covered during that call, or was important that was covered?
Yeah, no, those are both good questions. And I would say you wouldn't have had to guess if it was my first call, because I think those were the first words out of my mouth, very nervously, right? This is the first time I've ever made this call. I don't know how it's going to go. I don't really know that much about your company, but I was just vomiting, right? Just diarrhea of the mouth, just being totally honest and transparent with this person. Now, I will say, I will back up just a little bit in that what was nice at this point in time, with the help and guidance of Jim and some others, we had developed a checklist of questions that you should come forward with or be prepared with. Now, you're not going to get through all of these questions in the 20 to say 60-minute conversation that you may have with one of these folks, but I at least knew something, right? But man, I was afraid that we were going to get too far into the weeds because I didn't know much above that. Like, here's a question to ask, get your answer, and move on to the next question. If we were going to spend a lot of time on one of, any particular question, odds are I was not going to know where to go from there. But it was a great call. The investor relations guy, still a good friend of mine. We text back and forth. I mean, several other deals. So welcoming, so honest and warm, and just made me feel like he was sitting in Columbus and we were just having a chit chat, right? Over drinks or a sandwich or something. It was great. And he just allowed me to go through the questions that I wanted to go through and get the answers that I thought were the right answers. And then I followed up with an email with a few other questions that I thought of after we hung up, which is what he offered up. Hey, if you think of something after we hang up, feel free to reach out to me. So
That's
it did
great.
that. Yeah.
Okay. So then the private placement memorandum, like, what is this document and how was that for you? I remember my first private placement memorandum, and I remember thinking, should I call an attorney? Like, is this it? I know something is embedded in here, and it's intimidating. This 90-page document that you're supposed to read as you're falling asleep in bed, I'll just take care of this in the evening. And it's like, oh man. But how did you approach the private placement memorandum?
Well, and that's part of the reason why from the phone call to the funding, it took me some time. Like I said, 2.5 months, because the deal that was active at the time I called had since closed.
Yeah, I was like, wow, that's a long window.
Yeah, no, it was gone. Like, I didn't act soon enough, but I wasn't planning on it. But what was nice was I was able to get a copy of the PPM for that deal and go through it and kind of comb through it.
There.
And yeah, exactly. So that when I was ready to fund a deal and the deal came around, I knew what to expect. So the second time going through on the active deal that I was funding, I just went through to make sure that it looked very closely and read the language and the verbiage was very similar to the practice one, if you will, that I went through. And I would say there was some stuff in there that I wasn't quite as familiar with. So I'd get on Google and check it out. But again, I had that time frame, right? I had the ability, I had time on my side to just go through and figure out, okay, what don't I understand? I do have a buddy that's a lawyer, so I wouldn't take up a lot of his time. I would say I was responsibly asking him some pointed questions and trying to target some things that I knew I wouldn't be able to find or wasn't as comfortable with. So by the time I was able to fund, got to that point where I felt comfortable enough to fund, I was comfortable with the PPM. But that was just that one operator, right? I mean, everybody's got their own PPM. You don't always have time on your side. That's for sure.
So 35 syndications later, how do you approach the PPM as opposed to combing through it, running it by your attorney friend? How does that look differently now?
So now I would say I'm a little embarrassed to admit I don't spend as much time. Clearly, I don't spend as much time with the PPMs, especially if it's with an operator or sponsor that I currently invest with, right? Because I know what to expect. So I will still look through it, but at a much different pace than I would have if it was a new one. So there isn't a whole lot of I say new by definition, new investor, new sponsor, new operator that I'm investing with right now. If I were, then I think what I would do is take the same approach. I need some time. I want time on my side and go and spend weeks, month, whatever, going through the PPM. Not that you need that much time, but I do have a W-2, so I'm doing it in piecemeal, right?
Most of us do. Yeah.
I'll pick it up, look at it, put it down, pick it up a little bit later, look at it, put it down. So it's not like I'm sitting through, gosh, what is this guy? Why does he take 2 months? Yeah, it's because I'm not sitting down in one string of time and looking at it, piecemealing it.
So I also have a question about the PPM in light of your many investments. Is there a portion of that? And I don't want to get too into the weeds. I'm just thinking if anything pops out, is there any questions that you would answer or ask a new operator, let's say, that you could say, hey, could you draw my attention to where this is in your private placement memorandum? And what do you see as the greatest variables from one operator to the next, if any?
Yeah, well, certainly there's a lot of variables, right? Depending on asset class, but certainly the payouts, the waterfalls, the hold times, again, depending on asset classes. So some of that stuff obviously is going to be in the PPM. Some is not. Some of that's going to come out in the conversation that you're going to have. But I'm more concerned with what does the GP responsibility look like in the PPM versus the LP responsibility look like. And that does vary. Sometimes it doesn't vary based on operator or sponsor because they just boilerplate and it's just a new deal and they keep the language the same. But sometimes it does. But certainly within different operators and sponsors, that looks very different. And so I'm very curious about what that looks like. And then also, like I said, just the compensation. What's the payout going to look like? The percentages, the waterfalls, those kinds of things. And does it match what was said in the webinar? Does it match in what was said in the email that was sent out to folks? And there has been some disparities, not large ones, but there has been some stuff that has come through in the PPM that was different than what was discussed in the webinar or that what was put out in the hard copy, the deck pages or the deck slides. And so then that obviously leads to some questions, why this or why that? And I've never gotten an answer that doesn't make sense. It's usually, these were the assumptions that we made. And now it's been a couple of weeks since the PPM came out, and now the assumptions have changed for whatever reason. It could be, the bank or just the terms that they ended up coming to. So there's usually some pretty good, relevant, legit answers when I do find something that doesn't make sense.
Right. And I would just say too, if you're newer to passive investing, or even if you have 30 to 35 syndications, the PPM it's kind of an evolutionary learning process. You can continue to broaden your understanding of how it all works. Now, I don't want to be an attorney, and the language is overwhelming, but just curious. I'm shifting here, I'm going back, and we'll come back here. Did you have in real estate investment influence when you grew up, and your wife? Just thinking about her initial reaction and how you guys have gone down that road. Who taught you about real estate investment, or where did that cultural piece come from in your family?
I would say I did not have any background in it. The only person I can think of that, maybe down the road is I had an uncle who dentist and owned his practices and owned a partnership that owned the office buildings and stuff. But I never got into those conversations. For me, it was go to school, finance major. So in the business college, you get out, you get a business degree, or, you get a business degree, you get out, you get a job in the business world, and you go from there and you put forth the best effort that you can in your W-2, and you stockpile your money in all of the retirement accounts that you can, and you go from there. And then I'd say from there, it was really my buddy that knocked on my door that Saturday morning saying, hey, I'm going to go down and look at this house and I'm thinking about flipping it. Would you want to join? That was literally the first time that I thought, oh, okay, there's something else out there that doesn't involve me having a real estate license, or, that I don't have to be.
Gotta have hustle.
Hustle and grit, right?
Yeah. That's exciting. So what about, would you say that there was anyone along the way, whether it was in business school or your buddy, that has given you investing advice that you have held on to as you've made the transition from active to passive, as you go deeper and deeper into passive? anything that sticks out to you?
Oh, well, I could go back into my days into college, right? And even in my MBA and talk about professors that were very influential. But as far as, a specific quote or a specific way to do things, and then I've sort of held on to that, I would say no, except for the fact that my father, first and foremost, just saying, never give up, right? I mean, that sounds like an old cliche, but I had a quote. He and I are both runners. I grew up running, and that's sort of my background as a kid. I would run. I ran my first race when I was 5, and I did that with my father. And so I had a quote that I came upon when I was in high school, that you don't have to be the first, just be the swiftest, right? So just keep going. So to your point, have grit, have that hustle, have that passion, and it'll see you through. And so that came from my father, first and foremost, just saying, never give up on yourself, whatever it is that you're going to go after with passion. So I certainly have held on to that. And that's not just investing advice, that's life advice, if you will.
Sure. How have you translated or demonstrated the power of real estate investment to your own kids, or have you?
Yeah, so they certainly see me doing what I'm doing. More so, I would say on the active side, they knew that I was, because even though I had a property manager, it's called active for a reason. I was still active, right? I was still going to see those properties from time to time, not very often, but time to time. They would see me sit down every month with all the reports, and I would do my own P&L and my balance sheets and things like that. So certainly they've had that exposure more so than the passive side. On the passive side, really when I was getting into it was during COVID. And so we're all at home, right? The whole world is shut down and we're at home, but there were still deals going on. So that was one thing that you could still do from the comfort of your home, is you could look at a deal, you could wire money, you could have conversations, you could do that stuff. So at the dinner table, I was often talking about, hey, I'm doing this asset class, or I'm thinking about this. So they would get into it and ask me some questions. The three of them are very, very different. And I don't know, they're not there yet as far as wanting to be very involved or know more than what they know right now. But my hope is down the road, as they develop their own passions and mature a little bit more and see what it's all about and what it's done for me and them, our family, that they will get more involved, maybe ask some more questions. And I'm going to continue to poke and prod a little bit and force some of the knowledge their way.
Okay. Well, I'm just keeping an eye on the time. I want to make sure that we have time to hear about your involvement with left field investors. But first, I have one question. You have quite a few syndication investments. Just as a practical, how do you keep track of these?
Great question. I have an Excel spreadsheet. It's pretty robust. I'm old school that way. There are several platforms out there, but I just have not found one that there's some that are really good for this or for that. I just haven't found the one that I'm comfortable with for myself. And part of it is I built the spreadsheet that I use when I was in one deal, one syndication. And then it was 2, and then 3, and obviously it's evolved. So I'm comfortable using it because I know it and I know what I want it to spit out for me. So not a great answer for people that are really tech savvy or looking for that, new shiny gem out there. But there are some good platforms out there. I just happen to I'd be old school and use an Excel spreadsheet.
Okay. So you and Jim grabbing some beers together grew into something else. Let's talk about that.
It's grown into something else that we did not envision. And I mean that in a good way. So through our conversations, I became more over time and more beers and meals and meetings. I became more invested and more curious and intrigued about passive investing. Well, March of 2020, I think it was March. I used to know the date. I think it was March 19th or somewhere in the middle of March of 2020. Jim had organized a small group of people. It was going to be 12 people meeting in a restaurant in Columbus, Ohio. And it was only going to be 12 because we had a private room reserved, and that was the max allowed. And it was going to be local people meeting up who different walks of life in the real estate space. Some weren't invested in real estate, but they were curious about real estate. Many of us active. And then we all know what happened. The world shut down and we could not hold our meetup. It was going to be CPIG. Columbus Passive Investing Group was our name. Not a great acronym. We have since obviously changed, we changed names.
I would have liked to have been around that happy hour table.
Oh gosh.
When you came up with that.
Yeah, it was fun. We were coming up with logos and we were having fun with it, right? But the beauty is because we couldn't hold that meeting, we went to this format. We went to a Zoom format and we were able to invite all of our networks. And there's 5 of us that founded Left Field Investors. So myself, Jim, Dr. Steve Sue, who is here in Columbus, Chad Ackerman, who's here in Columbus, and Ryan Steek, who's out in Montana. And the 5 of us have grown it into something that is way more than a meetup. It is a place for people to come and learn. It is truly unique in that regard, in that we don't, we're not syndicators, we're not operators. So you can't come to us and give us money for a deal. What we want to do is educate people in this passive investing space and make them smarter and better and understand the importance of due diligence. And we think, our tagline is think differently, invest passively. And that's it. We want people thinking about this space, but doing it in a way that's smart and go about it in a way that's diligent and calculated. We know that there's the ability to go out there and go after a shiny object, right? And we all have that. And as long as you know that and you hold yourself accountable for that, I think that's okay. But that's not our goal. Our goal is not to go after the shiny object. Our goal is to go after people that will go after knowledge, share that knowledge, and then find operators and sponsors that we know, like, and trust, and have that go out to the community. But it's not just the 5 of us doing that. It is all of, there's, of all the people that are in our community, there's several sponsors and operators that the 5 of us didn't know about. So it's people sharing all of that, good and bad experiences. And then through that, we've developed different tools to help people along their journey. Like I said, the checklist when you call a sponsor, here are the questions that you should ask. Okay, well, now you've got a deal. What do you do? Well, here's some metrics that you can go through and check off that make it a good deal, bad deal.
Sure. So how big is your community now? You grew from, there's 5 of you. There were 12 seats at the original table. Where are you guys at now?
Yeah, we're approaching 2,000 members.
That's amazing. So it's a membership. You sign up for it. Is this like a subscription-based membership? You have access to different things. How does that work?
So there's 2. There's in our space, if you go to our website, leftfieldinvestors.com, that is free. There is a lot of stuff there. All you have to do is go to our website, and there's a lot of stuff there that is available to anybody that goes to the website. Then there is a subscription membership, annual fee. And what that does is it allows you access to our forum where we talk about a whole host of things. We could be talking about a deal. We could be talking about, what's going on with the economy right now. We could be talking about different books that we like, books that we're reading, why we like those. And then the tools. There's the whole section on our tools, the checklist and the deal checklist, as well as a sponsor checklist. There's that paid membership gives you access to that information. And that's called the infield. We've stayed with this baseball terminology. The ironic thing is none of us are really baseball fans, but it just seems to stick. Left field, passive investing is sort of out in left field. A lot of people don't know about it. So that was how that came about. So we just stuck with the baseball theme. So the paid subscription or membership is the infield, and that's what they have, some access to some pretty special things that we've developed and make it only available to that segment of our community.
That's amazing. So has anybody from the original 5 segued away from W-2 and this is their gig? This is what they're doing.
Yes. So we have Jim is a full-time passive investor, real estate investor, although he is also the front man. Left Field Investors was his brainchild, right? We all follow him. So much of his day, like 26 hours of his 24 hours in a day is dedicated and devoted to Left Field Investors. So I think he would prefer to have a little bit more time devoted to, actively, passively investing, which was what his goal was. But this has just become such a great beast and animal that it's taken up a lot of his time. But he is full-time passive investing. And then Chad Ackerman is part-time at his W-2. And so he's got some time devoted, 100% of his time. I think it's 1 day a week, as well as some other hours of the day throughout the week, certainly to LFI. That's what we all do, but 1 day a week. And then Ryan Steek has some dedicated time to left field. And then Steve and I, with Steve being a doctor and then myself working at W-2, we fit in where we can and we try to do what we can, but nothing compared to those 3 because they have been able to carve out time and dedicate it solely to left field. But Jim by far, this is his baby. for
So
sure.
are there any local chapters? Does anyone ever meet in person? I mean, you did start on Zoom. We're kind of out of that. I mean, Zoom will always be here, but do you have any in-person gatherings where folks can meet each other and network?
Yes, so there's a couple things that have happened. We went to our first as a formed group. Steve, Jim, and I went to the IIREC last January out in Los Angeles, and that was our first time going out as left field representatives, right? And then we had a meetup in October that was us, left field investors. And we do a lot with TribeVest. They're a big sponsor of ours and a big partner of ours and have been there from the beginning. So that was hosted and coupled with TribeVest in Columbus. That was a left field event. And then we're going to the Best Ever Conference this March. Now, that was
We'll
this
see
year.
you there.
Nice. Looking forward to it. That'll be
You
great.
come to my booth, I'll come to yours.
Like it. Yes, very good. So there'll be, all of us will be at that, the second half of the week. The first half of the week is the IIREC, and they're combining forces. So we'll have Jim and some others will be there for the first half of the week, but then all 5 of us will be there for the second half of the week. So that's us doing that stuff. But Boston folks have gotten together to do some happy hour stuff, left field. And then Phoenix has had their own little local meetup, if you will, people getting together. And I know of some other ones out there, but those have been the largest ones so far, and where people have shared, pictures of them getting together and meeting and having drinks and stuff. And then within our community too, we have 2 affinity groups, if you will. We have women in passive investing who have joined forces and created their own little group within our community of left field investors, but then they're their own little segment. And then we have a new one that's starting that's young professionals or young,
Love it.
A group of younger passive investing professionals. Yeah. And that's all within our group as well. So the larger we get, we understand the need and we don't want to lose that intimacy, right? I think there's more robust conversations take place the smaller the group. And so we understand the need for this. So we're allowing folks to, if you're in Chicago or San Francisco or whatever, please go form these meetups. I think it contributes to the collective knowledge of the entire group. And so these affinity groups will also do that as well, because there's just, there's people that we have monthly meetings, but it's hard to find your voice in those monthly meetings, or maybe you can't make that monthly meeting.
Sure.
And it's hard to find it in a forum as well. You want to have that personal interaction, and it just doesn't happen in a forum either. So we're very encouraging of these other groups that are taking place and forming. It's pretty neat.
That's great. Okay. We are just about out of time, but I want to ask you, and I know this is a question that could take a long time, but why don't you pick like 3 top points that come to mind? We're thinking about turning the corner into 2023. It's a new year. We're coming off of some Goldilocks years for real estate investment, which luckily for you, you were able to take advantage of, right? You just slid right in on time. Love to hear your top 3 thoughts about what's going to happen with the market unfolding. We didn't really get a chance to get into different asset classes and your strategy and building your portfolio, but would love to hear your thoughts on 2023.
Yeah. So first off, the first thought that comes to mind is I'm actively engaged in what's going on right now as far as deals that are coming in and underwriting those and doing due diligence regarding what's taking place. But I'm sitting on the sidelines with my funds. So I'm engaged. I know what's going on. I'm still reviewing deals, but I think the second half of this year is going to be very interesting for those that have some dry powder. And so I'm waiting for the second half of the year to come. Now, that doesn't mean that if something comes in the next few months that I wouldn't do something. I just think the second half is going to be much better than this first half and what we saw maybe late third quarter into the fourth quarter of 2022. I just think things are going to improve for people that are ready to take advantage of the funds that they're sitting on. So that's thought 1. Thought 2 is, and this is for people that are thinking about getting into passive investing. I'd be very leery about new operators, new sponsors. Go with folks that have a track record and ask for that track record and ask for proof of that track record and ask for referrals, because you said it. I lucked out. It's probably the one time that I've timed something well in my investing career. Usually I'm buying high and selling low. But everybody was printing money. Everybody was making money the last 3, 4, 5 years, given the conditions that we had, right? So find operators that have a track record longer than that maybe, had some experiences that weren't so great, and ask them about that. How did you handle? I guess that'd be my third point. Make sure you're asking sponsors and operators about something that didn't go to pro forma. Ask them how they handled that. Was it a bankruptcy, or was it, a land development that you couldn't sell? Was it vacancy issues that you had? We're in a demand surge supply issue. So how is all that factoring in your numbers? How did you, at the end of the day, how did you address it? And then how did you communicate that to your investors?
Mm-hmm.
That might be the one thing that, in 19, when I started doing this, that I didn't appreciate, was the bad experiences, or the fact that there was a market before this market that wasn't as good, and asking about, okay, so how did you perform in those years?
Mm-hmm. Yeah. And hindsight is always 2020, even in our own investment maturation process as well. So much more context becomes helpful the more we know. But man,
but that's what makes this great, right? I love this space because I'm learning something new every day, not only about myself, but about this segment of real estate, for whatever reason. That's what I like about it, is it's so nuanced.
It is so nuanced, and there's limitless bunny trails that you can go down to improve your knowledge. So Sean, thank you so much for being here today. Thank you for sharing your experience, your transition and pivot from active to passive. And then I just loved hearing about left field investors. I think a lot of our listeners are going to find value there. How can they get a hold of you and find how to take advantage of that?
Absolutely. So our website is leftfieldinvestors.com, and they can reach me at Sean@leftfieldinvestors.com.
Very good. Well, thank you again. And I will see you at Best Ever in just a few weeks.
Looking forward to it. Yes.
Yeah.
Thanks for today.
All right.
It's great.
You bet. Thank you.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.